Hi, 18 November 2022, Friday. This is Cal doing MAO right now. Okay, Bullard sets tone, signaling hikes rolls on. Now, who is James Bullard? He's one of the prominent hawks in the Federal Reserve camp, and he's one of the committee members. So for him, he has been pretty hawkish throughout the whole 2022, and now he has set the stage and said that even though that the pace can lower down, but the target could be as high as 5%. So I'll tell you more in greater detail coming up. All right. So before we go into that, thank you once again. Please make sure that you do your risk as management, and also thank you Ames for the kind sponsorship. Okay, now let's just talk about this James Bullard first. Now, first of all, we must understand why he seems so hawkish right now. Take a look here. This is a 7, 10, 2, 1 year, 30 year, 3 year this bond, okay, in a different year form. And you can see that the crazy part is this: the 10 year, the yield now is at 3.77, right? But the 2 year is trading at 4.46. Oh my god. That means that the nearer time frame, 2 years, is yielding now a higher rate. This is something incredible because you don't do that. And when that's happened, that means the whole bond yield is all inverted. And that means that people are pretty worried in the longer term. In fact, they are now don't mind only lending the money to the US government, but it must be a higher rate. And at 4.46 is really lucrative, if you ask me itself. Alright, so the thing is this: James Bullard came in and said that, alright, he set tone for the Federal Reserve official to signal more rate hike coming in. And of course, we have the US stocks and Treasury falling because of that hawkish statement from him yesterday. And he even mentioned that even dovish policies assumption requires more rate hike. So in short itself, he's only supportive for that. And from him, he says that now the current rate now is at 4.25, right? He believes that the recommended target should be at least 5%. And of course, it really goes a little bit higher. We can go as much as 7%. And that, of course, shook the market a little bit yesterday. Now, who is James Bullard, by the way? This guy is from St. Louis, and he's one of the committee members. Now, take note of these names here because recently we do see a few Fed official coming up. But if they are not inside this list, that means that whatever they say, you can don't be bothered. All right. So take note of this list. This is very, very important. Okay. Now, one thing is that we noticed, I shared this in a couple of videos before. I told you about the foreign holders of the US treasuries, and I mentioned to you that by September and October, right, we should see Japan, China dumping it. And truth be told, this is the latest update, shows that in September, Japan has liquidated at least $80 billion worth of, I think 8 billion, sorry, my bad, 80 billion, yeah, 80 billion worth, okay, of this the treasury in the market. And of course, you can see that other countries also do that, like China. Mainland China also have liquidated some, and of course Belgium increased a little bit, and of course even our own Singapore has also reduced about $10 billion. All right, so that's the reason why you can see that in August, September, and October month, we can see that the treasury comes down very fast while the yield goes up, right? And of course, right now the key point is this: do you notice that this is a common point back in last August, and this is what we have right now? Now, what we can see over here is that the common point is showing that there could be a prominent top level once again. And of course, the last time we saw this, it was at 117, 118, and now we're at 100. Okay, so traders, my view is just be careful, because if the thing pulls that down, then of course that means that there'll be further dumping of the bonds once again. Now, why do I say that? Because now you can see that the US dollar has come to the point of a technical support level. This is the last time when we saw the common point reach, right? You can see right here. That was where the US dollar was trading at about 95. Of course, this is pure technical, because right now the market is 95. This is then was 95, and now it's like 106. So you cannot really directly compare. But as a technical guy, when you see two common points right here, it actually tells me that we can look out for a potential buy. And look at it now; it's very near to the 200-day moving average, and the last high was at about 114.80. So when now it's 106, I believe that there's a good chance we can see a bit of technical upside. So I'm gonna say this: if all goes well, we should see the 108 level, which I've been saying quite for a while. Okay, 108 level should be able to be matched. Okay, so traders, watch out for this. So what if the dollar really goes up and the bond price comes down? So what do we expect here? So definitely we can see that the dollar yen will move higher, and incredibly, the the what you call the technical side is the same. You can see right here, the last time in August, you can see that the RSI nears down to 30, and that's where the market found a base and found a support, and then it went up, right? So what I suspect is that we may see the similar thing, pull down a little bit, and then we're going to go back up again. I still believe that the dollar yen is going to go back to 147. Now, recently, the selling right here itself, right, was because the Japanese government dumped quite a bit of the dollar into the market and try to increase the strength of the yen. All right, but if you remember the earlier sharing, right, it was September and October month, that's where they dumped the treasury. So after they liquefied their treasuries, that's the US treasuries, that's why they have the arsenal to do this following step, and that was what actually happened. All right, so with that, if the dollar yen is going to go up, the yield is going to go higher, the dollar is going to go higher, then what will happen to the stock market? Your guess is as good as mine. Now, I want to bring you to this very important thing, is the US equity market and the Fed balance sheet, okay? So I know that many YouTubers have covered this before, but I want to go more in depth with you, okay? Now, let's go back at 2009. In 2009, you can see that the Federal Reserve, when the stock market was coming down already by more than about 20%, the Federal Reserve came in to save the day because it was Lehman Brothers time and pumping about $1.2 trillion into the system. And of course, did the market continue to go down? Yes, the market continued to go down because even though there's a lot of funds in the market, but the market was doing a what they call a domino selling. Okay, but if you notice that after the heavy influx of money into the system, the market base out, and then wow, we see the incredible rally for the longest of time from 2009 all the way to 2015. Now that is where things get interesting. When the Federal Reserve had to go sideways or had to go down a little bit, that is where the stock market caved in and took profit. But the 200-day MA served a very strong support over there, and that's why the market found strength and continued to ride higher. Now this is where it gets interesting. Now look over here. This is where the Federal Reserve had to lower the balance sheet once again. But the stock market actually went higher because of resilience. But once they feel that, okay, it's a bit too much, bang, the market came down. Okay, so what I'm trying to say is this. Back then itself in pandemic, when the stock market was crashing down, the Federal Reserve came in huge amount of money. You can see that this is $4 trillion back then. By the time it reached here itself was $7 trillion. So they pumped in $3 trillion in a span of less than a year itself. So now what is happening here is that at this junction here, you can see that the Federal Reserve balance sheet is coming down, and that's why the stock market is coming down. But of course, the resilience comes because of the MA200 stopping here and caused the market to rebound. So what I'm trying to explain here is this. Now, the Federal Reserve is actually liquefying their balance sheet bit by bit, slowly but surely. So if you want to look into history, the last time we saw something like this where the Federal Reserve really load off their balance sheet, we can see the market spiking down in this manner. So I kind of believe that, right, we are going to do the same thing again. Yes, I believe that once the balance sheet has to go lower, all right, that means that the stock market will have to pull back down again. And of course, 30,000 is still an expectation for me, where now the Dow just trade at 33,000. So traders, you need to watch this very, very closely. All right. Okay, hold on, there's some technical issue. All right, so to go into a closer note of the intraday movement, you can see my point. So when the balance sheet was increasing non-stop since 2020 all the way, you can see that the equity market actually followed. But since here on the 23rd of June, where there's a significant downdraft on the balance sheet, you can see the stock market really comes down. Even though it goes up, it touches the MA200, what happened? Oh, bang, it came back down. So now the balance sheet is still coming down, and we are now above the 200 MA. So very critical, the 200-day MA now trading at 32,500. 32,500 is the level of the cash market on the MA200. So if let's say in the near term, if the market really goes below the MA200 and trades below 32,500, I strongly believe that there will be some selling. And based on what we are seeing right now, we have the same common point, but it's a lower rank here itself. So if the market pulls back down, then we should be able to do some from a bottom picking. Now, one thing to take note, right, that we have very, very sharp edges at the bottom here, very sharp. And you can see that it really symbolizes the bottom of the market very, very nicely. So I suspect that the next time we will see a pull down from the market, and if RSI hits again below 30, I think that will be a good time to buy, and then that is where I believe that the stock market has performed its bottom, and there should be a higher level coming soon. All right, so traders, this is my personal take on the market right now, but let you take your own decision. Yep, okay. All right, let's look at the chart right now and see what we have for today. All right, so look at the market right now using my KFC chart. You can see that the market at 33,031 is still very firmly there. Now, yesterday I already mentioned that the market, the Dow Jones, will pull back to about 33,200 level. The low was 33,187, and brilliantly our guys just bought back our shorts, and after we bought the shorts, the market went back up. Congratulations to guys who have followed and make the money. Yep. Okay, so let's just see what we have for today. As long as the Dow Jones stays above 33,258, it's still above the 90% mark, which means that we are now very, very near to the all-time high, not too far away, about 9% away from the all-time high. This is pretty incredible with whatever's happening right now, right? Now, for China A50 today, the market has went sideways, probably ahead of the long weekend. Ahead of the weekend, and the market just firmly stays above the technical level that I mentioned, and that's 12,280. So as long as the market stays above there, I think collectively market is still safe for the China A50. All right. So let's just look at today's chart right now with our TWB system. Okay, so for the Dow Jones today, we can see that the BNB was here. The BNB support was 33,342, and we saw yesterday the market tapped below it and rebound. So as long as the market stays above this BNB SL level of 33,342, all right, we should be able to see the market going up. And now it's trading above my pivot 1 at 33,588. So above OP and above pivot 1, usually we see upside. So the target that I'm looking at now, likelihood is 34,014, and today is a DJDD, so the opening price is critical. As long as the market stays above OP, it will be a buy for you. So KSI and my KRW, both of them are prior positive at the moment. So again, the market is leaning towards the upside unless the market loses 33,588 again. Okay. Now for the Nasdaq, we have another doji directional day again. Now seemingly recently there's a lot of doji in the market, and this is something that not seen before in my trading career. So if that is the case itself, right, it means traders need to be very careful. That means that big movement is going to come very, very soon. Traders, you need to watch this closely. All right. Okay, so for the Nasdaq right now, the market is still trading above the pivot 1 at 11,702. So as long as the market stays above OP and pivot 1, we should see the market going back up. And 11,906 have been triggered before, but it has a good resistance as a target. Who knows? It's going to go up again, because 2 days ago the market tapped the extension and then pulled back. All right. S&P 500. Now S&P 500, we have a very strong base right now at the BNB SL level, as I mentioned to you yesterday, and that's 39.54. So as long as S&P stays above 39.54, things should be still positive right now. But the only damaging part is that the KSI retain red while the KRW retain cyan. So what I'm trying to say is that the big boys are still trying to dump, but the holders are pretty strong right now and holding the market. So let's hope that the market can hold above the BNB support level and not break down, because the next breakdown could be as bad as 38.64. Okay. Now Hang Seng has technically closed for the day, but the after market is still open, and you can see today Hang Seng opens gap down first initially, but then once it crossed above the MLP, all right, it shot up all the way initially. Oh, my bad. The market actually gap up instead today. Oh, this is very bad. This is my bad. Okay, the market gap up this morning, but it failed to sustain this upside, pulls back down, break the MLP, and that's why the market is now trading below MLP for this. Okay, apology for that. Yeah, I was thinking that there's something wrong here. Okay, our TWB system is very different from most trading platform. All right. And wait a minute, you do understand this. This is called an inverse pivot. Normally inverse pivot, if the market opens here, it doesn't go higher, right? It will be drawn towards the second level, which in this case itself was pivot 1. That's why now I can understand why it gap up and then pull back. Very interesting. Now this is the Nikkei, and Nikkei has been sideways for the longest of time, and the BNB SRL level has become a strong support. So as long as the Nikkei stays above 27,942, the upside is still pretty strong at the moment. Yeah, okay, take note of that. All right, so let's look at the DAX, which is open right now. Now DAX is now trading with no pivot today, so which means that the opening price will dictate. So now we can see very clearly the market staying above the OP and the MLP at the same time, so which means that as long as the market stays above moving upwards, it should be testing the BNB RL level, which is being done right now. The RL level is at 14,383, so it's being tripped. So the next target, if the market continue to go higher, we can see all the way to 14,618 level. Yep, there's something to watch out for. KSI and KRW now are still a bit of mixed bag because KRW turns flat yesterday. So that means that the upside could be limited, but still towards the upside. Okay. Now, interesting for crude oil. Crude oil price yesterday continued to fall, and I've been telling you this, that crude oil could come down, as I gave the strong inclination yesterday that if the market loses the BNB SL level, which is $84.27, once it loses that, the market will come down. And of course, if you look at the chart right now, there is a possibility for the crude oil to come back down to $80. Now, of course, if the crude oil price comes down, the energy prices come down, inflation will be checked. All right, but of course, on the flip side, when energy prices come down, right, there's only one reason to that, is because the consumption of energy is not there, meaning that the economy is not doing as well as what people are saying. So it's a bit of like both sides over here. But nonetheless, in my opinion now, with the KSI red, okay, and my KRW lowering down at the moment, there is a very good chance to see the crude oil tripping $80. And interestingly, the pivot to today is also at $80. So it'll be like drawn to the magnet. If the market can't stay up, then that means that $80 should be pretty clear. All right. Now let's look at the gold market right now. Let's bring in gold. Moment. There's some. Okay, here we go. Okay, here we go. Let me treat the chart a little bit. Okay, so for the gold market, so this is silver. Let me just do the gold first. Okay, this is gold market, and as long as the gold market can stay above the OP of today, and it should be able to test the MLP. MLP is 1767, which the market missed it by a frisker. So if the market can't break MLP, then of course there will be some profit taking. Now, if the market go below OP, that's not a good sign. That means that the market could pull back all the way to 1748, which happened to be a stack at the moment because the MA 200 is also almost the same level. Now, my TWB system itself is all fully automated. Everything, the calculations all done for you. You just have to follow the numbers. As long as above certain number, just follow the upside. If it's below certain number, just follow the downside. It's as simple as it is. That's why people are actually going for my class in December. And of course, don't forget, we have a preview coming out on the 26th of November. Yep. Okay. At the moment now, more than 80 people have signed up for the preview. Thank you very much for this. All the strong support. Yep. Okay, let's look at the silver market to wrap up for this on the metals. Now, we do have a CCYR on the silver chart, and I did mention to you, if the silver price can come down to $20, it will be a very good price to enter. Yeah, so look out for silver if it comes down to the $20 mark. At the moment now, KSI and my KCX is showing that negativeness. Yeah, negativeness. Sorry, my KCX is positive, my KSI is negative, so we have a mixed bag at the moment right now. So let's follow the chart action. Yep. Okay, let's look at the Bitcoin and Ethereum to wrap it up for today. Now, something that I want you to be careful is that we're going to the weekend right now, and the way that the Bitcoin is consolidating the last few days doesn't make me feel any better, and I believe that this could be something big. All right. Now, the last time we're going to bring you into this, everyone. Now, the last time we see something like this where the market goes sideways, then the market just plunged right down. Okay. And of course, we have seen it before in the several times before, where the market goes sideways, it's never a good sign for Bitcoin. All right, you can see when it goes sideways, it's never been a good sign. So what I'm pretty worried is that, right, if we're coming to the weekend where the liquidity is a bit tight, if the market suddenly got some news coming and breaks it, then of course we can see that Bitcoin can go all the way down to the 14,000 level. And so I remember telling you guys this. At the moment now, my KSI and my KCX are all showing negative signal right now. So that's the reason why I'm kind of worried. And of course, it will be the same thing for Ethereum, because the downside could be going down to 1051 once again. All right, guys. Hope you like my sharing for today. Have a good weekend. I'll see you on Monday. And remember, the code is somewhere around the PowerPoint. Get it done. Send me the comment. I'll see you tomorrow. Forgot about this for the Spin the Wheel Lunch with Cal. This is Cal signing off. Bye-bye.